With Luna Classic's price flying over 420% over the last few months, people are now wondering what in the world is going to happen next. Obviously, we saw a ton of people FOMOing in, buying at the top, and now with Luna Classic's price falling, between 20 to 25%, many people are questioning, well, what should we do now? And so in today's video, I want to give you an update on what its price is doing, what I would be doing about it, some of the plays that I have in mind, and much more. And so with that said, let's not waste any more time at all, and let's get straight into today's video. So the first thing that I want to talk about is the fact that this pullback that we're seeing right now for Luna Classic, in which again its price has fallen, from peak to trough, looking at about 26 to 28% here. What I want to say about that is that it's rather expected, okay? It's rather expected, it's rather normal, and it's not anything that I would be panicking about, right? I know some people are seeing it down 8%, 9% today, feeling like, damn, I literally bought the top and now it's down 20%. What should I do? And what I want to tell you is that this is rather expected, and with that in mind, it's natural, organic, and healthy, in my opinion. Now, some of the reasons why I believe that this is natural, organic, healthy, etc., is just because of purely where we are, okay? First and foremost, when you go straight up parabolic, you're gonna fall. You're going to pull back, right? If you go up 300%, you're going to fall 20, 30%. That's just what happens. It is what it is, okay? Now, from a more technical based perspective, what we can see is that we're at a macro key level of resistance, one of the strongest on Luna Classic's charts. Obviously, putting in this high, this all-time high on the 610 level up here, pulling all the way back down to the lower low down here. We retrace our Fibonacci's. Clearly, you can see between this 2.4 level and this 3.6 level, you have your 618 to 786 Fibonacci resistance. This is the level that is the absolute most likely to reject any type of crypto, whether it's Bitcoin, Ethereum, XRP, any of them, Luna Classic, any of them, back to the downside, okay? But what's good about that is that if you're capable of clearing this level, you're then in a position in which you're generally going to push possibly even past your all-time high, maybe even upwards to your 1.2 or 1.618 Fib extensions, which obviously could be a huge move from where we are now, but time will tell. Now, so with this in mind, and knowing that this is such a key level of resistance, when we do start to see the price falling once we reach this level, it's not anything to panic about. That's what it does. That's totally normal, and that's why I would never be buying as we enter into a 618 to 786 box. Now, outside of that, we look at our chart prime oscillator. What you can see is multiple drives of overbought readings. Overbought, 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 overbought. All of them running on a lapse of bearish divergence, which says that this move to the upside was getting weaker and weaker and weaker as we approach this key level of resistance, with it finally starting to roll over right here. Now, we haven't got the blue peak finder. We haven't got the red reversal triangle just yet here. So who knows? Maybe there's a little bit more room in the short term for this thing to run back up to. But realistically speaking, it is just getting overbought, right? We're just moving too quickly to the upside. Looking at something like your Bollinger Bands, which gives you a good understanding of where your moving averages are at, what you can see here is that we're pushed far into the upside of your Bollinger Bands, and generally when that happens, as you can see, you will get these pullbacks towards the downside, similar to what we saw here, similar to what we saw back here, similar to what we saw up here and right here, etc. Okay, so in all of these circumstances where we are right now, there's a lot of reasoning as to why the price is pulling back, and it's not anything that I would be concerned about. And so with that in mind, let's now talk about what could we be doing as a result of knowing this is normal, natural, and healthy, and how can we try to make some profits off of it. Now, before we do get into the rest of the video, of course, we do want to bring you today's sponsor, which is HYDT. Now, this is a protocol which allows you to do things such as staking, farming, yield farming, etc. You guys know this was huge in 2021, huge in 2022, and although we did see some platforms not make it, what I do believe is a company like this can take the mistakes of some of their fallen brothers, I guess, and take those mistakes, build on top of them, and build much more sustainable long-term projects and companies that can produce consistent results, and I think that, again, is what they're doing. Now, what you can see here is that they obviously are the HYDT protocol. They offer 30% APY stablecoin staking, which is going to fall as time goes on, and as more people use the platform, it has to fall for it to be sustainable. You and I know that. They also offer governance token farming, which starts from November 9th, which it is live now, and they do have proof of all of their collateral and all that stuff, which is available for you to check out down in the description below on the BNB chain. Now, 5 key facts that are appealing to me: they have a fully decentralized and automated mint redeem process in the case of a depegging event, clearly building on some of the mistakes that were made in the past by other companies. Fully transparent collateral held in BNB, in which you can view and visit on chain. They have flexible and durable soft peg mechanism, up to 30% APY fixed return on stablecoin deposits, plus additional governance token farming rewards, and they have resistance to bank run events. As we did mention, something like the mint redeem process makes these things much less risky, especially than what we've seen in the past. Now, if we do go over to their DApp itself, you can see they have their dashboard here. You have the ability to stake your tokens with some of your fixed APYs, which I did mention will likely reduce as time goes on. You can also farm their tokens for HYDT and BNB, or HYDT USDT, or HYDT and HYGT, which of course you can generate the most returns currently from HYDT to USDT. I do like these types of platforms because we have seen some in the past generate consistent results for months and months and months on end before they may even run into any type of trouble, right? And then they have to make some adjustments, maybe reduce the APY or do things of that nature, okay? And so with this, I look at this like I look at an investment. I'm obviously not going to throw my whole bank account into it, but I'll throw a little bit of cash into it, farm it up, use their mint and redeem process, use things of that nature in order to build up that position, build up my holdings here, and keep trying to farm it as much as possible, especially while they have higher rates, okay? I like using platforms like these, especially in their early stages, and so if that is something for you as well, make sure that you do check out the links down in the description below and let me know what you think down in the comments. But with that said, let's finish off this video talking about what we can be doing now with Luna Classic. Well, it really comes down to one of two things, okay? When I'm deciding what I'm doing here, likelihood is I'm probably not going to be doing a ton of buying, okay? Now, let's think about this from a position of someone who has faith in Luna Classic in the long term. I'm not talking about a short-term trader. I'm not talking about someone who just wants to get in and get out because now is not really the time after a 400% move to the upside. I'm talking to someone who maybe wants to hold this thing for the long term. Let me explain to you what I would do here. What I would first do is draw out all of the key levels of support that Luna Classic has from a macro perspective, okay? So we have 4 that I can see, okay? We have this 9.5 level, this 11.5 level, the 13.4 level, and then clearly here, this 26 level, 206 level, okay? These are your 4 main points of support. Now, what I'm going to say is that the likelihood is that Luna Classic will find support off of one of these levels and bounce to the upside to likely try to continue its run to the upside, maybe even chasing that 35 level up here. Okay, now with that in mind, what that means for me is that every time Luna Classic gets to one of these support levels, I am going to dollar cost average a bit. So I'll dollar cost average a little bit here, right? We're going to call that maybe your 1% threshold. Then once we start to see maybe if it bounces to the upside, obviously these were some great purchases and now my position is going to start to increase. I can go back to normal DCA to do whatever I want, take profits, etc. But let's say maybe we're wrong. I think that's what everyone's fear is. What if I buy here and I'm wrong and it continues to the downside? Well, I'm under the opinion or under the belief that this level is more likely to hold as support than this level. And this one is more likely than these two. And this one is more likely than these 3, okay? And so with that in mind, being that there is a strong likelihood that one of these levels of support is going to hold Luna Classic before trying to at least make another move to the upside, what I'm going to do is slowly increment or increase the increments in which I'm dollar cost averaging as we hit every one of these key levels of support. Worst case scenario, it loses all levels of support, and then obviously we're in a position in which the position is red, and you're going to have to keep dollar cost averaging until it does make that move to the upside. But what I love to do is slowly increase the amount that I'm dollar cost averaging so that once I am right at some given point and it does finally make that move to the upside, my dollar cost average is extremely low because I was doing the bigger dollar cost averages at lower prices, and then it's much easier and quicker for me to get in profit and immediately start taking profit as it clears maybe 1 or 2 of those previous levels of support. So what it looks like is buying a little bit here, more here, more here, more here. Once we get that bounce to the upside, my dollar cost average is probably somewhere around this level here. I'm quickly in profit, and now I can already start to lock in some of those profits as it makes a move that might just be a retest back up to this key level, you see? So it's very easy, okay? I'm not throwing in big long trades. I'm not throwing in big short trades. I'm keeping it simple, keeping it easy, keeping it stable, because at the end of the day, you could be wrong, right? You could be wrong, and it could just immediately start to crash back to the downside, and all of these buys that you were doing right here are going to go negative for a little while, right? So you're not just throwing in as much cash as you possibly can at any given point. You're doing it slowly and consistently so that when the time comes that it does inevitably bounce to the upside, you can very quickly get in profit. This is the strategy I use for almost all of my dollar cost averaging these days, and I will continue to do it. So let me know what you're doing down in the comments below when it comes to Luna Classic. How are you buying? Are you buying? Are you selling? Are you in profit? Let me know down there, and of course let me know what you thought about HYDT as well. I hope you guys did enjoy today's video. If you did, let me know down in the comments as well. I will be talking to you all there very soon. Peace out, everybody. See ya.